Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
There's two kinds of charts: technical analysis. First, like literally the second day I'm at Bloomberg, Peter has me in the office and he says, tell me about technical analysis, because he thinks it's voodoo and smoke and mirrors. There's two types. There's trend-based, which is what I do. And then there's more momentum stochastics, the dynamics of the immediate market. Jeff deGraaf, and I promise we're going to do more deGraaf this 2025. Jeff deGraaf owned this at Lehman Brothers years ago. He's now technical research co-founder, Renaissance Macro. And this is well timed because yesterday on the Scott Wapner marathon at the Death Star, I mean, Wapner's on for like 6 hours straight. There's somebody on the show going after Jeff deGraaf.
Unbelievable.
On exuberance. So folks, for Global Wall Street, deGraaf has the exuberance meter in hand. Jeff, I was amazed yesterday how Wapner had to defend you on the Death Star. Jeff deGraaf, are we overly exuberant right now?
I don't think so, Tom, and I do appreciate Scott sticking up for us. I'll have to send him a bottle of wine at Christmas. That gives me
give him
9
some of
months
that
to save up.
MD-20. Wapner deserves an MD-2020. Give him that. Are we overly exuberant?
So I don't think so, and let me explain why. We measure the spread between high momentum names and low momentum names, and it's really nothing more complicated than saying what, if we rank names over the last year, what names are at the top 20% and what names are at the bottom 20%, and then how are those two buckets doing? And when we look at the 65-day rolling return of that spread, which I know this is a snoozer, but right now it's at the 82nd percentile. When it gets to the 90th percentile, and we play momentum. We, just like you, we play trend. We believe in those things because that's the right thing to do through time. Right. We can tell you that when it gets to the plus 90th percentile, we'll take a step back and say, look, too many people are playing this, and this is way too dangerous for a reversion. And so while there are a few anecdotes that got thrown out there with the Metas and the Plantaires and et cetera, but those are anecdotes. And when we really look at the meat of it, even just the top 100 names in the Russell 1000, we're not in that 90th percentile. And why that's important, Tom, is the risk is that you say, okay, it's overbought, I'm going to sell them today. And the next thing you know, your app 11 is up 30%. And, we all know this, the market generally can be so seductive that it brings you back in at exactly the wrong time. So to be too early to fade the momentum trade really is dangerous and requires a lot of mental fortitude, if you will. And I don't think most people have that.
Jeff, I did everything I could to be sure Damien Sassower was with me today. Damien.
Jeff, I mean, look, Tom mentioned it earlier. You were at Lehman Brothers from 98 to 2007. I'm sure you remember that a young, aspiring, emerging market strategist came into your office in 2002. His name was Damien, by the way. And he didn't ask about oscillators. He didn't ask about Bollinger Bands. He was asking about the Ichimoku cloud. I mean, do you remember this conversation? Probably not. But here's my question for you. You look at performance year to date, and you're absolutely right. Equity momentum is the leader. It's up something on the order of 4% year to date. Trend is sucking wind here. Talk to us about these trend-following strategies. Talk to us about that nice upward sloping risk-adjusted return that you're supposed to get from trend and why the strategy is not delivering.
Well, it's a fair point. And look, it's not going to deliver all the time, so we have to be careful of that. And I do remember, because there aren't many people that talk about those clouds, which I can't even pronounce, so I won't try. So you did hit the nail on the head when they say, be unique, be unique. That certainly was it.
Thank you.
I'm looking for the technical analysis dictionary, trying to look up what the heck you were talking about. The bottom line is trends work, and we actually are seeing trends intra-market work, right? In other words, we're seeing trends within the sectors work, we're seeing trends within the industry groups work, we're seeing trends within the actual stocks work. The difference is what we have today is more of a trend market than a momentum market. And what I mean by that is even though we're within less than 2% of a new high, we have less than 50% of the names within the S&P 500 above their own 20-day moving average. Now that's not a high bar, right? The 20-day moving average is obviously just the average over the last month. So it really is this rotational market that we're seeing. And that's why I think it's so frustrating for people that we've got the market very close to a new high, and yet 50% or only half the names are above their own 20-day moving average. And that gets really frustrating for portfolio managers. It is, though, at the same time, a very good market for long short. I mean, that is kind of the definition of what you want, which is I have the ability to add value through what I'm seeing on a long short basis.
Pro tip here, and this, of course, is part of Jeff deGraaf. I studied the clouds years ago. I had like a 2-week looking at Kenjusen and Senku Span A, and I just said, I don't get it. And what, folks, one of the big advantages of the Bloomberg is you can study the different technical theories to decide critically what you do like, and it's far more important, as Jeff knows, what you don't like as well. I went down at flames on the
and you can back test them. BTST on the terminal, guys. You have to check it out. But the Renmac Weekly Survival Guide is must read. It is a must read for anybody in the financial markets, and that is all you, Jeff deGraaf. Talk to us about what's going on with copper. I mean, copper, Hang Seng correlations, overbought in a weak trend. I mean, I'm catching this. It's up 8% year to date. What is going on in copper?
Well, it certainly is has started to fire up, and that's reassuring because we are seeing some signs in the overall market that the cyclical part of the market is coming under pressure. So getting a little bit of a boost out of copper is certainly helpful. And you hit the nail on the head, at least in our opinion, which is we think, and we've been in this camp for probably 6 or 9 months now, that China is in the bottoming process. We had trend changes last year. We had a momentum surge, and there's a very good relationship there between the price of copper and both the Hang Seng and the Shanghai 300. So, really our biggest, most bullish call, and we've said this, and I'll say it here, we think China is in the 08-09 stage where the U.S. was. We think that it is in that moment. Look, you had one of the things that we measure is alpha through time, and you can do this with markets, you can do it with sectors, you can't do it with stocks, or you can, but it's not going to give you any information. The alpha generation in Asia, particularly Hong Kong, the negative alpha generation was as extreme as anything we'd seen in 40 years. And unless you think that it's just going to evaporate and they're no longer going to be a global player, that just isn't sustainable. And so that can be early, and we certainly recognize that, but it was the momentum and the trend change that really said, hey, these two things combined are pretty powerful. And I think that's the residual of what you're seeing in copper.
For all of you across the nation and your morning commute, particularly for Global Wall Street on YouTube, subscribe to Bloomberg Podcast. It's our new television. Thrilled with what we see on YouTube. Jeffrey deGraaf with us for an extended conversation here from Renmac as we look at technicals and fold that into just as much not losing money is making money. Jeff deGraaf, the big change here, going back to the fossildom, I think of Chartcraft up in Larchmont and Wells Wilder and ADX DMI and all the trend-based stuff, to Damien at Lehman years ago with you at Merrill and Lehman. Jeff deGraaf, what's so different now is the financial media. And there's this frenzy, particularly on Fridays, of trying to market time by not participating in the market. Basically, it's one big media frenzy, go to cash. How should our listeners and viewers use your skills to participate in the market, even if they're hit with a frenzy?
Well, that's a really, really good point, Tom. And I mean, this gets very philosophical, but let's start with the buy and hold, right? Or let's just say a 12-month time horizon, or even a 6-month time horizon. Your probability over the last 100 years of having a positive return over a 6 or 12-month time horizon is above 60%. It's right around 65%, frankly. So let's call it 2/3 of the time. So if you think about that, if you had a coin and you flipped that coin and you had that advantage of being right 2/3 of the time, you're going to win a lot of money, right? So there's an extraordinarily high bar, and I think this is what people miss. There's an extraordinarily high bar to be bearish, right? Just your default position should be bullish. And as I always, quip when people ask me, how am I thinking about the world? I'm like, I'm a fully invested bear. That's the way I think about the world. I'm always looking over my shoulder, but I know that the default position should be bullish. That's not to say we're always bullish, because we're not. But again, the bar is so high to be bearish, and I think that's what people need to recognize. And one of the ways that we do that is through trend following, and we just say, look, if the trends are not on our side, then we have cleared that bar, at least one portion of that bar that we need to think about. And certainly we think about the Fed, we think about money supply, we think about some other things, valuation, all those things are important in that mixture. But really the one that stands out to us that's been the most consistent through time, because the circumstances change as to why there's a bear market. The market itself does not. The market will tell you that it's in a bear market simply by the trend. And so that ends up being our kind of final arbiter, if you will, of our market calls.
Jeff, a lot of strategists, myself included, we kind of make that mistake of equating technical analysis really with the equity market. But let's be clear, a lot of other markets, specifically rates and FX, trade on technicals. Talk to us about those markets. Are your indicators picking up movement, picking up direction in for example, the U.S. Treasury market?
Yeah, that one's a tough one. I mean, I will say we've been, both Neil Dutta, who's our economist in our shop, and myself, we've been more optimistic on, yeah, right. Don't tell him that. We've been more optimistic on bonds, frankly, than what the outcome has been. And part of that is because the trend has been mixed. And our underlying data says, look, even though we had this inflation print, it looks to us, if we look at the really key root causes of inflation historically and where we are with a Fed fund, a 2-year yield, and a bunch of other factors, it says to us that bonds are actually probably a pretty decent buy right here. Yep. If we were to look at it out the next 12 to 18 months. I know there's a lot of uncertainty around that, but that's always the case. So the kind of gold standard, if you will, of some of the indications that we look are still saying that bonds look attractive. So we haven't had a strong call on that, or a good call, I should say, over the last 3 to 6 months. So certainly our tails between our legs a little bit on that one. But I think one of the best things for technical is in FX, because you do get these policy shifts that don't tend, I know that the new administration may be an outlier here, but they don't tend to be that volatile. They kind of set a trajectory and they go. And so, one of the things that we're actually seeing right now, which I think is interesting, we're not getting the trends yet, but we are seeing some setups, is just the outright bearishness of Forex, right? So Canadian dollar, the euro, dollar. I mean, these things are really, really washed out. So even though the trends aren't in place, we have a couple setups in those that suggest that we probably get some relief in those currencies.
Jeff deGraaf just set up Damian Sassower there for our last question.
Well, I mean, he took the words right out of my mouth. I mean, really, the reality is when you're looking at rates and you're looking at fixed income, the reason a technical analysis, in my opinion, doesn't work as well is because of carry, right? I mean, you've got this coupon income that kind of smooths your returns out over time. But let's talk about BBDXY. Let's talk about the dollar here. We've seen a 160 basis point reversal in the last month, Jeff. I mean, it's choppy this year, man. So talk to us a little bit about what your indicators are telling you about the future direction of King Dollar.
Well, I think the overall trends for the dollar are still firm. I think it's in this long consolidation zone, right? In other words, overbought, momentum is fading. That usually results in a consolidation that takes you back into the longer term trend, if you will. Kind of think about it as a regression. I think the biggest weakness for the dollar here, the vulnerability is probably a better word, is what we see in that sentiment setup, right? It's become such a one-sided trade that anything that kind of shakes that is going to have people clamoring to get right-sided again, and that's the challenge.
Jeff, I got to get to that. Was very Luis Yamato, by the way. Jeff deGraaf, just simply, what is the best way to express long China?
Well, there's ETFs, there's the FXI, there's the MCHI, I believe it is.
Don't say Alibaba.
There's the KWeb. There's a lot of ETFs that you can have exposure. EWH is Hong Kong, so there's plenty of opportunities there to get exposure.
Jeff, thank you so much. Don't be a stranger. Mr. deGraaf works with Mr. Dutta at Renaissance Macro. I should point out that Mr. Dutta was my Economist of the Year, I think, 2 years ago.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
Professor Schiller with us, Wendy Schiller of Brown University, Angela Stent in the 9 o'clock hour. Who is Mr. Putin going to speak to, Professor Schiller?
Is that your question? Okay. Can you elaborate on that question, please?
We got Putin's going to talk to Trump, and I guess he's not going to talk to Ukraine, but is it just a bilat meet and greet, or do you actually see some Ukraine negotiation here?
No, we've talked about this before. I think there's no question Trump wants to be the guy that ends this conflict.
Yes.
And so he so far he is not pressuring the Republican-controlled Congress to cut off future aid to Ukraine. But that's clearly in his sort of basket of negotiating tools with Ukraine. He's willing to give away pieces of Ukraine on Ukraine's behalf, but he also will basically tell Putin, I'll stay in this as long as we have to. Right? So that's when you say who's he talking to, that's what Trump wants. And I actually think there's a pretty good chance he'll get it, because ultimately he's willing to walk away from Ukraine.
Right.
And I think Zelensky knows that.
The pivot point on this, folks, is I believe 2008, Condoleezza Rice and Robert Gates in Belgrade is sort of when we decided to extend NATO, et cetera, et cetera. Professor Schiller, how far is President Trump in his Oval Office foreign policy from traditional American foreign policy?
So, Tom, this is like a mind meld. I was just thinking this is exactly the opposite of the George Herbert Walker Bush and the George W. Bush Republican Party, which was, engage, exert influence, send troops where you need to. So this is a complete sea change. This is going back to the 1940s. This is sort of Southern conservative Democratic Party isolationism. This is, we will exert power when we need to, when it's in our interest, but otherwise we are not going to come to the rescue of democracy. We're not going to promote it, clearly shutting down USAID. We're not going to do this anymore. And John Quincy Adams said this, in the 1820s, we'll be with you, but we don't have to go in search of monsters to destroy. That's what how he put it. It's taking the United States into a completely different realm on foreign policy, but it's not soft power. Trump is willing to use the power. He just uses it in his interest and the United States' interest.
Professor Schiller, I want to pivot back to Ukraine here. I mean, if we have a snap election coming up in Germany in the next 2 weeks, there's a lot of polling going on. And my question for you is, if Zelensky gets, if he had the opportunity to vote in Munich, who would he be voting for? Would it be the SDP? Would it be the CDU? Would it be the AFG? I mean, talk to us about what's coming up in Germany.
Well, the Germans are facing sort of like multiple problems at once, right? We know in the economy, they have a very sort of heavily socialized, heavy tax state. They've always done well in this manufacturing sector. They've always done well internationally. That's slipping, that edge, and the capacity to support their internal welfare state is also slipping. There's also been tremendous immigration and migration to Germany that changes the society. So you're doing the two things at once, and we know that in the United States, we're having the same themes. So, the instability in Germany could be solved by going right wing. And that will, how that bodes for Russia-German relations, I think is unclear for us at the moment. But certainly when you think about this trend all over Europe and in the United States, it doesn't bode well for those people who think we should go out and champion democracy. But sovereignty is something different. Ukraine is about sovereignty. And that's another question that you start to wonder about with, especially with President Trump saying he wants Panama, he wants Greenland, he wants Gaza. Then you think about sort of nation state sovereignty, and it gets very, very complicated.
Yeah. Wendy, I get one more question in here. We got talent in the studio here. We got to get to her. His agent's going to go mental. Wendy Schiller, Navarro wants reciprocal trade. Are we bombing ourselves back to Section 338 of the Tariff Act of 1930?
Well, we don't. Nobody wants to go back to 1930 trade policy, I think, right, Tom? I mean, you exacerbate and then cause a worldwide global depression that lasts until World War II. So I don't think anybody really wants to go back there. But we haven't seen the impact on the American industries, particularly farm, particularly import-export industries. A lot of these have not hit yet. We saw in the first Trump administration that they're expensive. When they hit, things go south. So, his poll numbers are very high now. Wait a couple of months till these things really hit and see how the economy is doing. And I do think the administration will have to modify, but probably not for a couple of months.
Wendy, thank you so much. Professor Schiller, the Taubman Center, Brown University.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Julia Pollak right now of ZipRecruiter. Do PPI, then come back to the wonderful Economist at ZipRecruiter. Julia, good morning to you. UCal Irvine has a really, really staunch history in computer science. I saw a chart today of the death of technology jobs, witness Meta laying off, etc. Do you at ZipRecruiter advise people to go into computer science type programs now? What do you see at ZipRecruiter?
That is a great question. So tech was the place to be in 2015 to 2019. Huge job growth, wage growth, and as a result, people responded to those market signals. Government, economics, those were sort of the big concentrations when I was a student in college.
Yeah.
But now, overwhelmingly, computer science is the biggest major at top schools. And those students are struggling. Tech has not just stayed flat the last 2 years, it has lost jobs for 2 years. And we learned that with the last jobs report, with those benchmark revisions. All those curves were sort of flat before, and they've actually kind of swiveled around, rotated downwards since then. So we know tech is having a pretty gloomy season, and the announcement of further tech layoffs suggests there's just continued pressure to optimize and become more efficient. Tech companies aren't really looking to grow at the moment.
Julia, we've got claims coming up in just a few here, but I really want to ask you about the noise in the U.S. job market. And by noise, I mean, if I just look back, we look at, weather-related incidents like hurricanes, the LA wildfires, but now we've got these government buyouts. And I'm curious to hear your thought on what, if any, impact that's going to have on these figures.
I think it's going to have a huge impact in the aggregate. So first of all, these workers are going to stay on payrolls for the next 7 months, even the ones who've accepted the buyouts. And then when they do, they probably won't go into unemployment. Most will go from payroll to payroll. 7 months is a long time to find a job. Most people, even today, find a job within about 2.5 months. That's the median unemployment rate, unemployment duration. So you're not probably going to see it much in the aggregate statistics.
I'm also curious about, this whole concept of hybrid work, right? We've seen a lot of people returning to the offices. I mean, Jamie Dimon wants everyone back in the offices. They want me back on Sundays. I want to ask you what you're seeing in the numbers in terms of, remote work. I mean, does it still exist? Is it turning in the other direction, or are we sort of flatlining here?
Let me define that for you, Julia, here. What he's talking about is work from Golf Simulator.
No one said that. No.
All right. So we did a major employer survey recently at ZipRecruiter, and 31% of employers have pulled back on remote work and imposed some kind of return to the office mandate. But wait, 33% have actually expanded remote work. So you have an interesting situation where in the aggregate, remote work is actually flat as a pancake, to quote Nick Bloom, the big scholar of remote work. And especially if you look at Fortune 500 companies, more than 80% of their corporate employees are allowed to work remote or hybrid. Among companies founded in just the last 10 years, young, new companies, it's more like 90-something%. So remote work is here to stay, but at the big, stodgy, older companies, and Amazon fits that bill these days, JP Morgan fits the bill these days. These are older companies. These are not the new scrappy startups. Yes, you do see leadership liking the office.
Julia Pollak with us. She will stay with us after we see the data. I'm glad Damien brings up, we'll also get claims here, initial claims. That's statistic and survey, 216,000. I can't say enough, folks, about Julia's observation there on Professor Bloom of Stanford. His ambiguity over the last 90 days. I mean, even the guy who's smartest on this and has put the most data work into it is unsure which way hybrid is cutting. It's just that simple. Let's do this. We're going to get to the PPI report right now. We've got red and green on the screen. The VIX, 16.12.
And the news just coming out. So yesterday, CPI came in hotter than expected. Today, PPI for January, hotter than expected too, up 3.3%. That was the expectation, came in at 3.5%. That's year over year. We take food and energy out of the picture, 3.3%. That was what expected. Came in at 3.6%. Want to go to initial jobless claims. The expectation was for 216,000. Came in a bit lower, 213,000 applications were filed last week. Now we see the difference in the markets just a bit. Right now, we have NASDAQ futures up about 0.1%, 25 points. We have Dow futures, still little change. S&P futures, still little change. The 2-year yield, 4.34%. That's little change. And the yield on the 10-year, 4.60%. That's down about 1 basis point. But I heard a couple wows from you, Tom. I did.
Yeah, I did. In revisions, Lisa, which you didn't have. I didn't have it either. It's just out moments ago. The revisions set higher as well. The annual revisions, which are critical here, will be part of it. But these are wow statistics in that they confirm what we saw yesterday in CPI with this set of business inflation statistics, final demand, and the other mix of it, different from 20, 30 years ago, the way it's measured, show a sense of inflation. A little bit of green in the screen, the red and the green go out as well. But in the yield space, I'm going to call it confusion. Initially lower yields. I really need to see where that settles out over the next 10, 15 minutes as you digest this data. And Damien, the 10-year real yield, 2.15%. It's beginning to pull up a little bit.
Yeah. It was at 202 just a few weeks back. I mean, look, now this puts the onus on tomorrow's import price index because that should come in pretty hot as well. And if this inflation narrative that things are kind of heating up here starts to get hold of the markets, that whole asymmetric risk-return profile in terms of the Fed cutting before it hikes goes out the door. So
I agree totally. And let's go to Julia Pollak here with ZipRecruiter. Julia, I got CPI up, I got PPI up. If I get a nominal retail sales tomorrow, which has some energy to it, do I get to a nominal GDP that sets us up for a hung Fed where they can't move?
That is quite possible. I mean, this is some of the January figures could be seasonal noise. We know that in the past, January reports come in hotter than others. But there's a choppy path ahead. Employers are going to hold back because of these high interest rates until there's sort of greater clarity, and consumers and businesses face continued cost pressures, and this is a big problem for the economy. I think everyone had hoped by now that we would be heading towards a 3.5% 10-year, not a 4.5% one.
The biggest deviation is PPI core, ex food and energy year over year. 3.3 was a survey. The revision is higher, 3.7.
And it still gave you a year-on-year increase.
And the statistic today is 3.6. I mean, you fold this into Trump tariffs. Yep. Like, where are we, Damien, 4th of July?
Well, I'll tell you where I am. I'm 51 years old. And, I want to go back, Julia, to what you said before the break when you were talking about these stodgy old companies. And you mentioned JP Morgan. And I mean, maybe I'm getting a little bit old here, but that doesn't seem stodgy to me. And I guess the question I have for you is, within what you're seeing at ZipRecruiter, the demographics beneath the surface, what about guys my age? Like, are they finding jobs? I'm just curious. It's an AI world. It's young. It's tech-driven. Where are the jobs coming from?
So healthcare is the big exception. It remains month after month after month the one bright spot where it's the one industry where hiring rate has gone up.
Biotech, life sciences. No, I'm just kidding. I'm kidding. No, but I take your points on that. So healthcare is one. But that can't possibly support the market the way we're seeing here. Yeah. Where are these payroll? Is it immigration?
But every other sector has seen a major decline in the hiring rate, or it's sort of flat. And job growth has been flat to negative in most sectors. Just a few areas where new jobs are being created.
Please come back. Julia Pollak with us with ZipRecruiter. We love to speak to her about the incredible digital-driven granularity of ZipRecruiter.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
This is my book of the year. I don't really care what comes the next 8, 9, 10 months. Angela Stent's definitive Putin's World, Russia. against the West and with the rest is brilliant on Mr. Putin. We're honored that Angela Stent would join us today, senior fellow at the Brookings Institution. Angela, in the last chapter of your acclaimed book, what kind of engagement with Russia? How should the President of the United States engage with Mr. Putin here in the coming days and weeks?
It's a great question. Glad to be on your show again. What's interesting is that, Mr. Putin, having been in the wilderness in terms of contacts with Western leaders for the past 3 years, now has this offer from President Trump to meet in Saudi Arabia and then probably in Washington and in Moscow. What I find curious about all of this is that if you read the book, The Art of the Deal, right, you don't give away your maximum position before you start negotiating. And so Mr. Hegseth, and echoed by President Trump, have essentially conceded to the Russians most of what they want. So I would think that this would probably be, when they do meet, a rather positive engagement, because they're on the same page.
Give us an update on the weight of the past as you begin your book. The weight of the past of President Trump hearkening to tariffs of the 1930s, and the weight of the past of Vladimir Putin hearkening back to Elizabeth, or Catherine rather, or Alexander the Great. I mean, the weight of the past here in these discussions is huge, right?
Yeah, I think that's a terrific point. Obviously, this fascination with tariffs making the U.S. stronger again is also, Mr. Trump's understanding of history. But with Putin, he now sees an opportunity to sit down with the American president, without the Ukrainians, without the Europeans, who are supposed to, once the deal is done, make sure that it's enforced. Sitting down with the American president and essentially agreeing, let's go back, to that nice day in Yalta in February of 1945, when the U.S. and Russia and the Soviet Union at that point essentially divided the world between them, with Great Britain sitting there. This time, in the end, probably China will be let in. But for the moment, that's what Putin wants. That's what he's looking back to. And he may well get that.
Angela, as the part of any deal, there's a word that they might have to freeze the borders here, right? Given where we are. And my question for you is, talk to me about the Kursk region, the region that Ukraine invaded, the region that is currently under Ukraine control. Do you think Putin would ever allow that region to be transferred over to the Ukrainians?
Oh, absolutely not. The Ukrainians were hoping that if they continue to occupy part of the Kursk region, they could use that as a bargaining leverage to get some of their territory back that Russia is now occupying. I would be very surprised if that was part of the deal. Again, I haven't heard that from any of the American potential negotiators on that.
Angela Stent, you're an expert at what we've witnessed with the present president. I think of the gentleman from Exxon, Mr. Tillerson, exiting stage right at some point. Your observation of the first 25, 26 days of the reign of Marco Rubio at the State Department. Is he the Secretary of State, or is he sitting on the Oval Office couch just taking notes?
That's also a good question. I note that Secretary Rubio has changed his position on a number of issues. When he said he was senator now.
Wait a minute, Angela, wait a minute.
Nicely done,
she
Angela.
is the politest guest we have.
That was very nice.
Angela, continue with the diplomacy that the Jürgen Stent household is acclaimed for.
Right. So President Trump named the main people yesterday who are going to be negotiating. He did have Secretary Rubio as part of that group. What's even more curious to me is here's General Kellogg, appointed as the chief negotiator in Munich now with his team, ready to negotiate. President Trump didn't even mention him. So I think this comes back to, if you look at the people who were mentioned, it looks as if Mr. Witkover, right, who not too many of us knew before he apparently got the American teacher Mark Fogel release, that this was the pattern in the first Trump administration, it's often people, very close to President Trump who don't necessarily have official positions, who seem to be doing a lot of the heavy lifting.
Well, this is why we have you on, Angela Stent. Keith Kellogg has earned it. He's actually a throwback, folks, to the kind of military we had in the first weeks of the first Trump administration. What would you expect, Angela Stent, General Kellogg can advise on to the Ukrainians, and particularly Mr. Zelensky, or for that matter, to our European allies who feel left out?
So I think General Kellogg, as I know him and from what I've read, he's much more suspicious and hawkish on Russia than apparently a number of the other people who are going to be involved in this. So I think if I were him, he clearly has to advise the Ukrainians, to be as tough as they can and to try and retain whatever leverage they have. He has, however, said that they should be holding elections soon, which will be very difficult as long as the war goes on. And by the way, even if Trump and Putin meet and negotiations begin, the Russians aren't going to stop that war until they get, what they want. And I think what he would be advising the Europeans is that they remain involved and step up when this war is over, because both President Trump and Mr. Hegseth have made it clear that U.S. troops aren't going to be part of this deal.
Angela, I'm going to ask you a question. We don't have a lot of time for it because I know we could talk about it for hours, but the Caucasus region and Georgia in specific, the Georgia Dream, all of that, Armenia, just talk to us a little bit about what is going on in Ukraine and the spillover effect into some of these nations you're seeing that lie between the Asian steppe and Russia itself.
Yeah, well, in Georgia, you now have a government in power that's much more pro-Russian. And if you look at opinion polls, Georgians said, we don't want to happen to us what happened to Ukraine, and therefore we have to accept the fact that we probably need a government that's more pro-Russian. Armenia's going the other way. It's now distancing itself from Russia, trying to have a closer relationship with the U.S. and with Europe. So there's a lot of turmoil. But obviously the Russian war on Ukraine has made all of these countries sit up and think about how they negotiate their future.
One final question quickly here, Dr. Stent. In this incredibly original meeting of Trump and Putin, what will you listen for?
So I'm going to listen for what they say when they come out. Every other meeting he's had with President Putin, President Trump has praised him. President Putin has also praised Trump, but, less enthusiastically. I'll be listening for that, and I'll be listening to see whether, in fact, these two leaders are going to go on and negotiate something more than an end to the war in Ukraine, but in fact, whether the United States is going to cede to Russia what it wants, which is a restoration of its sphere of influence.
It is a one volume, 362 pages. I can't say enough about it. Angela Stent, Putin's World, my book of the year, I guess I said 3 years ago. Thank you so much, Dr. Stent. Honored to have you with us here this morning, always with the Brookings Institution.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130. Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines on Bloomberg Surveillance with Tom Keene, Paul Sweeney, and Lisa Mateo.
Damien Cesar in for Paul Sweeney. It is the daily look at the front pages. Lisa Mateo joins today.
All right, it is happening. Android phones now getting Apple TV for the first time. So if you look, it's on the Google Play Store. It's a free download. Before, you can only get it on Apple's own operating system, third-party platforms like Roku, but they want to boost their streaming subscribers. I mean, they had the hits. They had Severance. They had Ted Lasso, huge hit. But it's just been lagging behind.
They're lagging behind, but they're catching up. Neil Mohan of YouTube, the leader at YouTube, who we owe so much to in terms of this successful experiment, put out a lengthy note yesterday. And I was sort of thunderstruck how Google's not resting on their laurels. They've got this project, that project. They got the Lisa Mateo project.
Well, Lisa, how much does it cost to get TV Plus?
I think it's like $9.99 now. They increased it. Yeah, it used to be $4.99.
Oh, that's cheap, right, Tom? Guy like you.
Paul Sweeney will say how many people are actually watching Apple TV Plus, and I don't know.
I mean,
what I see at home is YouTube and Netflix.
And
that's my extensive summary.
Yes.
It's what do you got next?
That's all my kids have, YouTube and Netflix. Okay, so this new side hustle is back in the spotlight. We're talking about the professional line standers. The people who stand in line and people pay them to do it to get certain things. On TaskRabbit, they jumped 18% in U.S. in November and December. The reason why, though, they're saying is because retail brands are leaning into these luxury real-life experiences that you have to stand in line for. So since more people are doing that, they need more people to stand in line for them. But also restaurant reservations, I didn't realize this, but some of them you do have to stand in line for. You can't just call or go online and make a reservation. So they have that like Lucali in Brooklyn where like Taylor Swift and Kelsey, went. So those places you have to stand in line for.
Oh, since she lost, you're calling him Kelsey now? It used to be Travis, right?
Sorry.
So
Travis Kelsey.
Lisa, how
like Mateo.
The restaurant thing is out of control. I mean, Damien, you have a real life.
Well, I mean, my question is, look, we need some income in my household. I've got 3 little kids. Can they stand in line? Can we pay them? I mean, like, how old do you have to be a professional line stander?
I don't know, but they can make up to $27 an hour.
That's what I'm saying.
The restaurant thing, I don't have the patience for the restaurant thing.
Yeah.
I'm just like, is it? Do you experience this?
I do. But to have to stand in line to eat at a restaurant.
Somebody the other day said they were denied entrance because they didn't give them their phone number. They said, "I'm not going to give you my phone number," and the restaurant said, "Go away." It was McDonald's. Next.
All right, last one. Tariff fears are changing a lot of things, right? We've been talking about it, but the fears in Europe actually pushing dealers to fly gold bars by commercial plane from London to New York.
Wow.
So we all know, right? Sparking the biggest transatlantic movement in physical bars in years. This is from the Wall Street Journal. They're saying traders, major banks, they want to yank them from the vaults deep below London streets. Also Swiss gold refineries.
Like how big a bar?
And bring them across. They're saying JP Morgan, HSBC,
no,
all
but
these
what's
banks.
the size? I mean, like
the size of the bar.
A James Bond-like
gotcha.
size of a gold bar would make the plane tip, right?
They're on commercial planes. If you're coming from London to JFK, you might be on a pretty pricey plane.
What I think Lisa's really onto here is the fact that a gold bar costs a lot more in Manhattan than it does in London, and so that has everything to do with with dollar sterling. I mean, with the British pound.
I would just opine that if you're coming out of Milan, the gold bar is called a Fendi bag. You buy a Fendi bag at the Fendi store there in Roma or whatever, and that's like a gold bar equivalent.
Like you've never been at Bloomingdale's across the street when a senior kind of pulls a gold bar out of her bag to try and pay for a pair of shoes? I mean,
Lisa, how was Pantera in Berlin? I mean, it was like
people are actually believing that when they see me.
It was great. I mean, I'm glad you stood behind the speakers as well.
This is the Bloomberg Surveillance Podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.